Thank you so much for joining me today. Yesterday, Tesla reported their Q4 2022 earnings, and we have a lot to cover, so let's get started right away. Here's a headline from CNBC. Tesla reports record revenue and beats on earnings. In the fourth quarter, Tesla reported $24.32 billion, which beat analyst expectations. And they also reported auto gross margins of 25.9, which is slightly below analyst consensus. And as of the time of this recording on Thursday, the stock is almost up 10%, so the market seems to have really liked what Tesla reported. If we take the current stock price and annualize Q4 earnings, this gives the stock a price-earnings ratio of 34. If we look a little bit closer at the financial summary from Tesla, you can see that quarter over quarter from Q3 to Q4, gross margin is down about 200 basis points. And this is with higher regulatory credits as well. And the lower margin is due to lower average selling prices, either due through incentives or mix shift. However, even with that 200 basis point reduction, Tesla was able to still have 16% of operating margin, which is 120 basis points from previous quarter, but is not as much as 200 basis points from the auto gross margin, which means that Tesla's operating leverage is continuing to kick in through the quarters. This gave Tesla the ability to report record net income at $4.1 billion, and Tesla was also able to add $420 billion of free cash flow for the quarter. Here's a pretty eye-opening chart from Tesla's earnings deck that really tells the whole story of what's going on here. In 2017, Tesla had over $100,000 average selling prices for their car, and the whole business was making negative margin, almost negative 13% margin, meaning that the company was losing money. By 2019, Tesla reached about a $60,000 average selling price, where they were able to basically break even, make 0% margin on the entire business. But as their prices for their cars continue to decline to the consumer, you can see that the margin from the business continues to rise. So you can see from 2019 to 2020 to 2021, prices continue to decrease, but the margin from the business continued to increase. All the way through 2022, where the average selling price for a Tesla was roughly around $53,000 according to this chart, but Tesla is still making upwards of 17% operating margin from the business. In other words, Tesla offering lower prices on their cars doesn't necessarily mean lower margins from the business. And this is a story that should be closely tracked in 2023 as the rest of Tesla's business grows. Let me go ahead and walk you through my key takeaways from the earnings report and the earnings call. First, demand seems to be vastly outstripping production. There was a comment made on the call from Elon that said that the current demand levels are almost twice the production capacity that Tesla has. Now, this is based on the last week or two of demand based on the price decreases. It's going to be very tough to uphold this level of demand for the whole year, but it bodes really, really well for the prospects of Tesla to be able to sell as many cars as humanly possible in 2023. There was also a question around Elon on Twitter and his tweets and how they can be potentially divisive. And the general message from Elon was that there's no perceived brand damage, that they don't think these tweets or anything are really having a material impact on Tesla's ability to sell cars. Along the same topic of demand, there was a lot of verbiage from Tesla pointing to them being very aggressive from a price perspective. Elon and the management team were constantly reinforcing the fact that price really matters. And it seems like Tesla is going to be very willing to pass on any savings onto the consumer that they get either through EV tax credits or from efficiencies from the business, which seems like Tesla is on a mission to ensure as many people as humanly possible can get their hands on a Tesla, which should be a very good message for people that are looking for Tesla to continue growing into the coming decade. There was also some commentary around recession and how that could impact them. There was also some commentary around recession and how this could impact demand, but the general message from the team was that even in a recession, Tesla should still be able to continue to grow. This obviously could be at the expense of lower prices and lower margins, but Tesla's really investing in its growth in 2023. The target on the earnings deck was 1.8 million cars for 2023, which is a slight increase from Tesla's Q4 production. However, on the call, Elon went ahead and de-sandbagged himself, and he said that there's a chance for 2 million cars sold in 2023, with the general guidance that the margin should be somewhere above 20% margin for the cars and an average selling price somewhere above $47,000. If we take those numbers at face value and we extrapolate them out for 2023, this means $94 billion in vehicle revenue for 2023 and somewhere around $20 billion of gross profit for the year as well from the car business, which is roughly around where Tesla ended the year in 2022. However, the CFO of the company, Zach Kirkhorn, had commentary around how operating margin or the money that Tesla makes from the entire business is not going to be more important to track than the car margin. And the way I interpret that message is that Tesla is going to expect a lot of growth from the non-auto business in 2023. So even if Tesla was in a position where they had to lower prices further or have an impact from a margin percentage from the car business, Tesla has the ambition to make this up from other parts of the business. And so the big one that comes to mind is energy and potentially full self-driving revenue. And this kind of commentary really lines up with the message that Tesla has given that they really want to get aggressive on price. And as long as there isn't some crazy recession or depression, Tesla should be able to achieve gross margins on the car business above 20%, which gives a lot of upside to the rest of the business to surprise in 2023. As far as the car business goes, Tesla also mentioned that Cybertruck will be ready for 2023 to be launched, but in very low volumes. The team said that in 2024 is when Tesla should enter volume production, so for 2023, investors should not expect a large number of Cybertrucks on the road. I would highly caution anyone having more than, say, 10,000 Cybertruck units in 2023, maybe even 1,000 units in 2023. In other words, be prepared for a very low volume of Cybertruck in 2023 with a much bigger expansion into 2024, which will actually help margin in 2024 for the car business because Cybertruck is going to be sold at a much higher average selling price. Now, as far as future products go, there was a lot of teasing around this compact car platform that could make an appearance as early as Investor Day on 3/1. There wasn't a lot of details shared around this topic on the call, but it does seem like Tesla is very keen to get something out there about this product. I highly doubt we'll see the actual car shown on 3/1. There might just be like a skateboard and how many batteries they think they're going to have in the car, or the number of drivetrains, or the type of manufacturing processes they're going to use for this vehicle, but something should be unveiled for this platform on Investor Day on March 1st. There was also questions around EV tax credits and the Inflation Reduction Act in the United States that started in 2023, and Tesla gave guidance that government credits should increase into the coming years. Tesla expects somewhere between $150 to $250 million of additional credits per quarter for 2023 due to incentives they're receiving from moving manufacturing into the United States for battery cells. And they expect this to potentially become very, very large into the future, which will obviously help Tesla's abilities to grow their margins. And around the topic of full self-driving, there was reinforced commentary that Hardware 3, which is the current hardware suite in Tesla cars, is going to be safer than the average human. However, there was also commentary around Hardware 3 being an expensive retrofit when Hardware 4 comes out, which Cybertruck should have when it's released. This implies that Hardware 4 is not just a camera upgrade or a computer upgrade. It sounds like there's something around the positioning of the cameras, the type of harnesses, how many cameras they have, so on and so forth. Otherwise, it should be a pretty straightforward replacement. And so the question that came up for me is Hardware 3 good enough for Robotaxi? This is probably something we'll get better insight in on Investor Day or in the next AI Day that Tesla hosts. I do think that Tesla is going to solve full self-driving. They're going to be able to have a Robotaxi network where people are going to be able to add their cars to this network. However, it's a little bit unclear to me if Hardware 3 cars are going to be able to be added to this network. And the main reason why I'm thinking this way is because even though Hardware 3 might be safer than the average human, say by 300% or 400%, is that going to be good enough for regulators to allow this software to be an actual Robotaxi, where any Tesla owner will be able to add a car with Hardware 3 to the fleet as a Robotaxi, which will allow them to earn revenue on that car. However, from a safety standpoint, Hardware 3 I'm sure is going to save a lot of lives. It's going to make it so much easier for anyone with a Tesla to be relaxed and to get from point A to point B. But I do wonder if Hardware 4 is going to be the actual solution for Robotaxi. And anybody with a car with Hardware 3 may need to do an expensive retrofit in order to add their car to the network. I do want to be transparent in how I'm thinking about this. It could be that Hardware 3 is going to be good enough to be added to Robotaxi network, but if Tesla isn't able to reach Robotaxi with Hardware 3 cars, there might be some confusion from existing owners, especially if an affordable retrofit isn't available. I don't view this as a long-term risk at all. Any sort of automation or safety improvement or ability to get to a full self-driving future is super important in my eyes, but I do want to throw a little bit of caution in the wind for people that are assuming Hardware 3 cars will 100% be added to the Robotaxi fleet. I'm sure we'll get additional info from Tesla once they do upgrade to Hardware 4 with the Cybertruck and we get a little bit more insight into the completion of the software. In summary, I think this was a solid quarter for Tesla. They had record revenues, record earnings, market-leading gross margins, and a really, really promising look in 2023 with a lot of growth ahead of them, especially with a car market that's likely to continue shrinking in 2023, meaning that Tesla is going to continue increasing their market share from a total sales perspective, so much so that Tesla could very much have the best-selling car by units in the United States and globally with the Model Y, and it could be the largest automaker in the world, period, by unit volume as early as 2027 or 2028. I really think Tesla's strategy of of really lowering their price as much as possible in order to allow as many people as possible to buy Tesla is the correct move. And this is pretty incredible to think about because not even 3 years ago, people were doubting Tesla's ability to be profitable. And now there's a very legitimate chance that Tesla could be the largest automaker in the world, period, from a volume perspective, let alone earnings perspective, as early as 2027 or 2028, especially with the introduction of the compact car and the Cybertruck. But do let me know what you think of this earnings report in the comment section below. Were you happy? Were you sad? What are some of the green flags? What are some of the red flags? I would love to hear your thoughts below. If you want to join my community to discuss this and many other topics, do consider becoming a patron using the Patreon link in the description below or by clicking join right below this video through YouTube. You'll get access to my awesome community in our private Discord. If you do want to support the channel by purchasing some merch, just like the shirt I'm wearing right now, consider doing that in the description as well. Or you can use my code for athletic greens in the comment section as well. Thank you so much for watching, and we'll see you in the next one. Take it easy, everybody. Bye-bye.